In this video, I'm going to show you why we use the CCI indicator on the middle time frame to show us whether or not we should be taking a supply or demand zone. We're looking at the euro right now, and on the high time frame, we've got a downtrend. Therefore, we're going to be looking to rejoin this downtrend at some sort of supply zone. If you look at the middle chart, we are below that negative 200. And obviously, we're below the negative 100. So this is telling us we are allowed to start taking supply zones. And where would that be? If we take a look on the lower chart here, we've got this drop base drop right up here, right here. And this, essentially, this is the zone that broke through the 50 on the 15-minute chart. And it's what broke structure right here on our 1 hour chart. Okay, so take a look. As this is going to pull back into this zone here, let's turn this off. So it's actually going to go past that 15-minute trend cloud. But this is the zone. As long as this pulls back into here and CCI does not go above positive 200, okay, that's what the picture should look like. That's when you know, okay, I'm allowed to take this zone. This makes sense. Sell, put your stop loss in place, okay? And that's what you would do. So TrendCloud is telling me this is a legal move, if you will, okay? Now, what else do we have here? Let's just take a look at how TrendCloud reacts on the Japanese yen. And I want you to see we are in a look at how extended this trend is. And look at that. If you went short here again, you pulled back because this is extended, it really, really wants to close above that 50 and recalculate before it continues down. But this is just in free fall. And if you watch like CNBC or whatever, they'll say, oh, it's a falling knife, they call it. And nobody wants to get in front of it. But now you know you don't have to be afraid of that. You just have to wait for it to recalculate, make sure CCI is lined up and that you're still in that downtrend, and then you can take the trade. Okay, but I wouldn't risk money on a trend to the downside if it's extended like this. It's just not worth it. But let's take a look at CCI. And let me show you exactly what this looks like, okay? So here we've got CCI crossed above positive 200, okay? We are in a downtrend here, and we're just going to ignore the fact here. Let's go back. Let's go back here. Wow, this is just, my goodness. Let's go back to here. We are in a downtrend, okay? Right here, candles are red. CCI is below negative 200. Great. Pulls back into that blue shaded area, and look what it does. Pulls back into the trend cloud. Okay, let's look on the lower time frame on that 15-minute chart and see if we could see any. Okay, so it looks like it pulled back into this area here, and it's choppy here because we've gone back too far on this contract here. Let's go to the full contract. When you see something like that and you want to back test it and analyze it, just go to the full contract, and then you can analyze your strategy. So high time frame, 4-hour chart, we're in a downtrend. Trend cloud is red. Candles are red. Where is this going to pull back to? We're going to be looking for supply zones. We got a nice confirmation entry here to the downside. And if you look at CCI, pulls back into that blue shaded area and impulses down. And that's what you get here. Pulls back, impulse down. Look at where CCI is. It's even below negative 100. You're way far away from that positive 100 line, right? So this is beautiful. Pulls back underneath that negative 100 line. We love that. And there you go. Big impulse down. Okay. Pulls back into the cloud. Confirmation entry signal. Now we're right here. Right? We're right here. Recalculates. See how the candles now recalculate? We get that confirmation entry signal here on the 8th wave. You probably want to not take that. Okay. It does give you some money, but we really want this thing to recalculate, and this is what it does. It gives us a recalculation. We're way below that positive 100, right? We are pulling back into the blue shaded area. We are still strong to the downside. We are still in a downtrend. Confirmation entry signal, boom. I mean, that was beautiful. Okay, how about here? More confirmation entry signals, pulls back into that blue shaded area, boom, impulse down right here. Big move down. Okay, now what happened here? Okay, pulls back deep right here. Let's see. Okay, pulls back, and what happens? It fails. We have 1, 2, 3, 4, 5. 5 trades in a row that succeeded, then 1 failure. Not too bad. Not too bad. Then what happens? We get a deep pullback. Here's another one. This pulls back, and this fails. So we got 2 failures out of 7. Where's the next supply zone that we'd be looking for on this chart? Remember, this hasn't happened yet. We're looking for supply zones that broke structure to the left here, okay? This broke structure to the downside. Does it go back that far? Let's take a look. This right here broke structure right there to the downside. Oh, look at that. Boom. Let's take a look. Broke above. Okay, we are above positive 100. Okay, so when this pulls back, CCI is telling us that's a dangerous move. Okay, and so we wouldn't take that. And look what it does. It goes all the way through it, right? Breaks below again, pulls back. We know that this is not going to, we know that's not going to be a viable zone because it's not fresh. It's got blown all the way through. And then look at that, okay? We get the signal to go short again, but again, it pulls back into that zone on very high momentum. It ends up working, okay? And right here, we get the signal now that it's safe to go short. And what does it do? Well, it pulls back into this zone. See that? That's how this works. All right, that is how this works. Let's get rid of this. That got blown through. Look at the rejection off of that zone. Okay, this is a rally base drop right there. Look at that. So that's how we would use CCI. What just triggered here? Oh, our trade just triggered here. Okay, let's go over the S&P. Okay, this is an extended trend, and as an example, we're going to take the zone. Here's a drop-based drop, right? It's got 5 basing candles, and it's totally safe to take, but look what's happening, right? This is 5 basing candles. That's a lot of basing candles. The trend is extended on the high time frame. So that would be a very risky trade. But the next zone is up here. Okay, this is an example of taking into consideration other factors other than CCI, right? What do we learn about basing candles? The less basing candles, the better. What do we learn about zones being fresh? We want them to be fresh, right? This zone is fresh, but it's got 5 basing candles. So this drop-based drop looks a lot better. This drop-based drop here looks a lot better. So what you would do is get rid of that. That's the better zone right there. And I'm doing this for example, but I'm not taking this trade because the trend is extended. And when the trend is extended, it's going to want to close somewhere above the 50. A candle has to close above the 50 first. This is still a zone that's worth taking. Okay, we've got the 50 here on the 15-minute chart. It's also got the 50 on the 1-hour chart, and we're in the cloud on the high time frame. There's a lot of resistance levels there, a lot of resistance levels. But what we don't like is that the high time frame is extended, and that means it's going to want to go deeper, like back here. Okay, let's check the Dow. What do we got going on here? Downtrend. Boy, we love that. nothing is extended below negative 100, the Dow is a much better opportunity. And look at that, it pulled back into the cloud and then made a move down. But let's look at that 5-minute chart. Aha, 5 minutes going extended. That means it wants to trade a little deeper. Could have a shallow pullback here. Okay, but we do see this right here, this drop, base drop. Okay, that's a nice level right there. Drop, base drop. Got the 50 inside that 1 hour cloud. And it's also hitting the bottom of the cloud. I love that. Boy, I love that. Right there. I love that. There's your stop loss. See, and we reduced our risk as well, didn't we? We reduced our risk by taking that zone right in the middle there. Let's put Fibonacci on there and see if we can get a better fix on this. All right, grab Fibonacci, swing high to swing low. Wow, look at that, guys. 618 retracement level. We like that. We can put it there and have $195 risk, or we can put it right at that 50. Let's keep it at the 50. So we've got the 50, we've got a retracement level inside of the cloud. Boy, this is beautiful. This is beautiful. Let's go to the NASDAQ. Okay, so this is the thought process. Aha, okay, see? NASDAQ went extended, pulled back, recalculated, and candles are trying to pick a direction right now, right? Where are we on CCI? Boy. Okay, not such a great picture. We really want a nice break below there. Okay, so NASDAQ is showing some strength. It did break below right here. It did break below by a smidge right there, and we are pulling back. Let's get rid of that. We're pulling back into this consolidation area here. But let's take a look and see what we can find. Okay, so we do have this right here. See that? Rally, base, 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 base. This whole thing, okay? It is reacting off of that top of that area there. We could say this candle is the rally candle. That's the leg in, base, drop. Okay, and look at that. It came in and didn't quite hit it, right? We draw it like that. Okay, fresh zone. Looks like it just hit the proximal line of that rally base drop right here. Okay, it hit that 886 retracement level right there. 886 retracement level was hit. This is the full contract, so that's pretty expensive. That is the process. Okay, let's just keep going. Russell, let's start fresh. Downtrend on the 4-hour chart. Candles are red. We're looking for supply zones. Can we take supply zones? Yes. Why? Because we are below that negative 100. All pullbacks will come into this blue shaded area. Let's start looking for it. What do we got right around here? Oh, and look at what happened there. Right here. Okay, that little pocket right there made a move down. So we were late on the Russell. Okay, that would have been a nice move. That's a $130 move on full contract. Okay, and look where it is. It's in the 1 hour trend cloud, and it's also hitting the bottom of the 4-hour trend cloud. Okay, those are your resistance levels. So we've got our supply zone with high time frame resistance levels, which is the cloud. Safe to take this. Why is it safe? Because we're below negative 100. Beautiful. Okay, that's the thought process. Let's go down crude oil. This is what I wanted to show you on crude oil. Look at how we've got break to the upside on CCI and then immediate break to the downside. Okay, then we get this little move and then rip to the upside, breaks above 200, rip to the downside, breaks below negative 200. Okay, we don't like that. We really don't like that. Here, break to the upside, rip all the way down, break to the downside. Strength to the upside, over positive 200, rip to the downside, breaks below negative 100, and then rips back above positive 200. Okay, so we're getting these extremes on crude oil, right? Rip to the upside, pulls back. Okay, we're in the middle here, and then breaks down, pulls back into, okay, here's a viable zone, pulls back, hits the trend cloud in the blue shaded area, and then rips to the downside. And then immediately, boom, rips all the way to the upside here. So when you see, you can really evaluate a contract that way. Rips to the upside, all the way down, rips to the downside. Rips all the way back to the upside. This one worked, right? Pulls back into the cloud, and then makes a move up, and then breaks all this structure here. But that's because we went extended. Now look at this. We went extended, so we wouldn't be in any of these trades here until it recalculates. Right here, recalculates here, breaks above positive 100, and what does it do? It pulls back into the cloud. Let's put a line on there and see right there what that looks like on the 15-minute chart. Okay, you see it right there? Rally base rally. There you go. Okay, pulls back into that rally base rally. So if you were watching this, it happened really late at night. But if you were watching this, pulls back into the demand zone. Sorry, make that green. Pulls back into our demand zone. Safe to take because it's still above CCI. All right. And makes a move and pulls back again, and makes a nice move up. Breaks above, and we make some money. Now, the pullback. Okay. This pullback here pulls all the way back, breaking through structure. We want to be careful when we start to see structure being broken on the low time frame. And what does it do? It breaks below negative 100 on CCI, telling us that it's safe to start taking supply zones. But oh, look, we are still in an uptrend. We are in an uptrend on the high time frame. You always take the context from the high time frame. So we wouldn't be going short because we're in an uptrend on the high time frame, and we're in an uptrend on the middle time frame. But CCI is telling us, hey, something's up. And what do we get? We get a deep pullback, and the candles recalculate to that next push up. But very choppy, very choppy on crude oil. So now candles are recalculated. Candles are green, recalculated to the upside. What are we going to be looking for? We're going to be looking for demand zones, right? Because we are above positive 200. Above positive 200, right there. We're looking for our demand zones now. What do we see? We got a rally base rally right here. Make that green. And does it make us some money? Pulls back deep, okay? Bounces out. Pulls back. Beautiful. Look at each time it pulled back into this demand zone. Look at CCI. Okay, pulls back into that blue shaded area, no problem. Pulls back into the blue shaded area, no problem. As long as we don't crash below that negative 100, right? Pulls back, big move up, rips to the downside, just breaks a little bit below. CCI indicator says it's still safe. Okay, it's still safe. It didn't break below negative 100, breaks a little bit below. So now this whole zone here, we would gray out because it did go through. But look what it does. Makes a nice little move up. And then finally breaks right here. And now we've got mixed signals, right? Break below, but we're in an uptrend. What does that mean? That means that this is probably going to be some kind of deep pullback. This is a deep pullback. What do we have to do? We've got to wait for this signal right here. Once you see this, now we can start making a move to the upside. We can rejoin this high time frame uptrend. Where's the demand zone? This is where we're at. We've got this wedge pattern here, right? So this is great for also classical charting patterns, wedges, bull flags, bear flags, right? You can use that CCI in conjunction with your high time frame trend. Trend is up, candles are green, start looking for demand zones. Are we allowed to take the breakout of this triangle? Yes, we are. How come? Because we're above positive 100. and the pullback is going to be shallow into that blue shaded area. And what do we get? Rip to the upside. Okay, so that's pretty easy to see. That triangle was pretty easy to see. And what we're looking at is this consolidation area here. We're looking at that consolidation area there, and it pulls back into it. Makes a big move. Where's the next move? Where's the next move? Right? Got this rally-based rally right here. Pulls back, move up. How about here? Pulls back into that area. CCI is telling you it's safe to take. We're in an uptrend. Take that trade. Okay, pulls back into this drop-based rally right there. Drop-based rally, rip to the upside. Look at that big wick candle. If you take the whole wick of that candle, maybe on this one, we do something like that, right? Just take the top wick of the candle, pulls back, hits it, rip to the upside. What's happening up here? Pulls back again, breaks through that zone. Okay, that zone is not fresh anymore. We hit it a bunch of times. It's not fresh. It made us some money. And all of our demand zones are exhausted. There are no more demand zones to take because CCI broke below -100. And we're still in an uptrend on the high time frame. So there are no more demand zones to take. That is what I want you to understand. So all the demand zones that we took and the breakout of that triangle all took place in an uptrend on the high time frame as CCI was above +100. As soon as CCI broke below -100, then all the demand zones were exhausted. There are no more demand zones to take because we're still in that uptrend. Now the candle is starting to turn red. Okay, CCI and CCI indicator, where are we at here? We've crashed below. Candle is red. Candles are red. Okay, we haven't really, and we just crossed over. Okay, so we got a crossover on the TrendCloud high time frame. We are very early in this high time frame downtrend. All right, but remember how crude oil has been acting. Break to the upside, break to the downside, break to the upside, break to the downside. Not really comfortable trading that. So I would want crude oil to look absolutely magnificent. It has to look absolutely perfect. I want to see a break below this right here. I want to see a break below structure before we can start looking for supply zones again. And by the time it breaks through this structure, it might be ready to go back up. That's what this is showing. Break to the upside, break to the downside, break to the upside. You want to be in situations like this. Uptrend on the high time frame, uptrend on the middle time frame, above +100, shallow pullback into that CCI. Where are those demand zones located? Well, look on your lower time frame and you will see them. That's what I wanted to show you, some live market analysis, and that's it. So that is it for today. I will see you in the next video.